Good evening, members. We all have gathered here for study circle meeting on one-person company and its compliance. And to dwell upon this subject, we have CA Thirupal Gorige, sir. I have privilege in introducing today's speaker. Before that, we would like to welcome him with floral bouquet. Can I request? CA Thirupal Gorige, one of the partners of Messrs. Thirupal Gorige and Associates LLP, a company secretary's firm from Bengaluru. He is a BCom graduate from Sri Venkateswara University, Tirupati, and a fellow member of Institute of Company Secretaries of India. He is also one of the insolvency professionals registered under IBC code with Insolvency and Bankruptcy Board of India through ICSI IIP. He is one of the core resource persons for Blue Book, ICSI Premier on Company Law and Company Law, Volume 1 and Volume 2, Commentary on the Companies Act 2013 released by ICSI New Delhi. He has been a speaker at various forums, workshops, seminars, etc. organized by various institutions and organizations like various chapters of ICSI, ICAI, ICWAI, IIMB, IOD, COEIS, ICSI, etc. With this brief introduction, I present before you CS Thirupal Gorige, sir. Over to you, sir.
Thank you, sir. Yeah, good evening, all. It is my privilege to address this subject. Is there for last 10 years around. Still, the subject is not properly understood. And you see the numbers, how many OPCs are there in India, you will come to know that why the subject is not taken up and why people are not showing interest for this particular concept. But the concept wise is good across the world. Many countries have got this concept, and to a surprise, in Pakistan from 2003 onwards this concept is there. So I don't know why in India. Yeah, there are certain issues are there. I think that I will raise my presentation. Maybe government should look into those aspects to promote and motivate this concept. It's a very good concept because it will enable the succession. In fact, my submission is there even to they should enable this particular concept like they enabled LLP to the professionals. All individual operator concerns of the profession, like chartered accountant, cost accountant, company secretary, or even the lawyers, to adopt the one person, have the limited liability concept. And then succession again, succession probably you have to nominate someone who can be your nominee, and in the absence of you are in incapability to contract, enter into a contract. So he will be stepping shoe of the member. That is the one thing that they are looking. If it is a CA firm or if it is a cost accountant firm or a company secretary firm being a proprietor concern, and the nominee is supposed to be the another member. Of course, it can be like I can have tie-up with my friend and I can make him as a nominee. The nominee did not be, successor of my family. He can be successor of my business. Actually, the whole idea is that the business what you have created, the legacy that you have created should not get collapsed in your absence. You have created a lot of, value addition and a lot of, what is that called? What is that? Clientele, you have that. You must have, got some name or something like a fame. That should not go with the person. That is the whole idea. So I suggest even for the government to allow this particular OPC for the professionals. Very good concept. And then like example, one name I have, like I have taken this my LLP. So now this particular name is not available throughout India, throughout anywhere. No one else can use this. this is also again one more uniqueness throughout the world. Also you can recognize your name. So these are the advantages are there, and then of course succession is the one aspect. The second one is the limited liability concept, and the system, that ecosystem that you have created will continue. The legacy that you have created, or the clientele, whatever it is, maybe of course you must have developed the clientele based on your personal rapport with the client. But still, if you have generated a system where you have got some 5-6 employees with you, and they can take forward with the help of your friend in your absence and all, that's a good idea. That's what I recommend. Even the government recognize this concept to especially for the professionals to us, because we don't look for any loan from the bank and financial institution, but exactly we look for the professional, limited liability. When it associated to my professional work, we need to have that limited liability concept and success. And tomorrow my family comes, and if they are able to sell or realize something from my legacy, and they are also in advantage. So that is I recommend. So let us look into this concept how it was. So this is a disclaimer. As good as the views are expressed by me personally, they are not associated to this organizer of this particular study circle, and also ICAI. And see, this presentation was prepared by, supported by two of my trainees, qualified trainees. And so if any mistakes are there, it is my own responsibility, not theirs. And I don't have any intellectual property right over this consent, so you can use freely. There is no requirement to obtain any consent from me. Yeah, as I told you, the concept, the genesis and the global development of the OPC is something if you see, it is there in the UK first, in the year 1992. So they have modified the 1985 UK Companies Act, and they have put one separate regulation saying that the company's single member private limited company regulation 1992. So this came into force somewhere in 1992 July. And from that day onwards, you will find in UK with a single member. What we have today, UK is there, UK is having from 1992. Similarly, in US, you will find LLC. There is a limited liability company, but that LLC can be a one-member LLC, it can be multi-member LLC. Both are allowed. Many states in the US country, and they are allowing this concept also for quite some time. I think it is there from 1967 somewhere it is. It is there, it is available. But they say it is not an incorporation organization. They say it's not an incorporate entity. They say it is a association of persons, something like this, written with a single member. But they gave it is a corporate look, body corporate, success and everything is allowed there. So similarly, if you look at the China in 2005, they have first time introduced the one OPC, and similarly in Australia also they are there quite some time, around 2002 or 3, and Singapore of course is there, it is a well developed country, and Qatar also you have, and Pakistan I told that it is in 2003 onwards they have the concept.
10 years before.
Yeah, 10 years before us. And then Turkey of course 2012, and several other countries they have the concept of OPC. So let us see what is there in India. See, in India in the year 2005, JJ Irani committee, they have recommended this OPC to be formed, to be allowed by the government of India. The whole idea is that it is a technology driven, and lot of ideas been formed by the individual alone, and he may not get some other partner to create a company. A similar thought process, or getting the similar partner may not be possible to him. So they say that why don't you allow those kind of companies like information technology, service sector companies, let them also have the build up their entrepreneurial capabilities and venture into the economic activity, and don't allow them, don't say them that they are not allowed unless you create a company. So why don't you allow? Let it be another kind of outlet and visibility, everything will be created. So that some economic activity can happen through them also, and they will create employment, they will create the all these taxes, marketplaces, all those things. So finally government after their recommendation, they have introduced the bill somewhere in the 2000, I think initially 7 was there, and post to that 2009 bill was there, then post to the 2011 bill also they renamed it. 2011, the bill is the one which got approved today. We are talking about 2013 Companies Act, it was a 2011 bill, renamed in the year when they have passed and announced the first time in the September 2013. So they named it to 2013. So then they incorporate the concept of OPC into the prominently into the Companies Act. So we'll see that. I told you it is basically corporatization of micro businesses. So individual business and proprietary concerns. That is the whole idea. So if you look at the partnership forms allowed in Bangalore, you will find few crores. If you see the Sapuri Star and you find the number, running numbers, will be some few crores. Maybe not running. Similarly, the data of proprietorship is not available anywhere. Only probably you will get the data with the GST department or even earlier with the sales tax department. That's all. So maybe labor department or even shops and establishment here and there to get. But technically you don't get the data. They are there, but it was not a well recognized. You can say the concept of limited liability. All those things were not there, and they were vanishing with the person. Those things were there, but if you look at the, I think I was told in the, now you have got around 14 crores taxpayers in India. In that you will take many of them businessmen, many of them, half of them would be around what you can say, people of salaried, all those stuff. So balance would be earning some income from the business or trade. So if you allow them opportunity, you will get at least 6 crores. Okay, people getting into business mode, which is the very very viable mode if you make it. Then think of it, the number of companies that they generate come to the on board, and you will get the taxes and all those things. Everything will be online. You will get everything. Good opportunities are there. You should encourage them. That is the whole idea. I don't know government. If many other government and also underdeveloped countries, they have got this concept, and they are improving this. And though they have introduced around 10 years back, but still there are certain lacunas are there. So in the OPC, I will let you know that. So that's exactly I told you. Access to the market, credit facility, limited liability, perpetual succession, all will be there for the proprietary concern. So as I told you, it is there somewhere 1st April 2014, and then by 2022, this is as per MCA data bank, we have total active companies. So it is a public and private, all companies together, put together. Though the running number from the incorporation wise, if you take, there are around 24 lakhs companies are there. But out of that, 14 lakhs companies or 14 lakh odd are the active numbers. In those active numbers, OPCs are there 43,000. Okay, 43,000, and in the year 21-22 alone, 10,112 OPCs were registered with authorized share capital 411 crores. I'll tell you what is the reason happened, why people have moved into this particular 21-22. From 1st April 2021, government made lot of changes, structural changes for the OPCs, which was encouraging comparatively when prior to that period. So I will let you know what are those structural changes. So because of that, probably in 22-23 also another 10,000 would have been created. So to encourage further, government should do something with respect to taxation. So I will also share the taxation issues what we. And this is about definition that OPC is defined under class 62 section 2. I say that means OPC means a company which has only one person as a member. Only one person as a member. Formation is like any other company. So OPC also will be formed by subscription sheet signed by the one person as a private limited company. His name will be there as a subscriber, and his responsibility is there to get another person who gives his consent to be a nominee. Nominee is there basically in his absence or incapability of the sole member. That particular nominee will become automatically a member. But they have given clearly the law, subject to the successor laws. this particular gentleman name will be incorporated. Doesn't mean that he is a owner for the entire property or estate left by the deceased person. No, that estate will be still decided by the Succession Act. Yeah, legal heirs only. Even if you look at the regular nominee sections, Companies Act 72, and prior to that 199A, 109A and B of the old Companies Act 1956, there was a Supreme Court judgment on this. Whether Companies Act is there to decide the succession. Suppose I am a Hindu, I have Hindu Succession Act, I am Muslim, there is something, there is special law is there. So the special law is there to regulate the succession, not the Companies Act. So they said clearly, Companies Act is there to regulate the companies, not to regulate the property transmission and all. So then the ministry gave the clarification to the Supreme Court, said that we found from over a period of time lot of dead folios in the listed companies. And dead folios are exploited or misused by the people aware of that there are dead persons. And people started getting shares transferred, regular physical shares. You all know that there is an RTA will be there in house outside. These guys inside, they used to exploit those folios, the dividend used to be encashed, the shares used to be get transferred in their name, all those things used to happen. A lot of fraud used to happen. To avoid that, government says to avoid that fraud, so we have provided an opportunity to the registered shareholder, like any bank, financial institution, they provide for FDs and there is a nominee collection. So we just collected the data so that there will not be any empty folio, and then this particular nominee will act as a trustee. That is the whole idea. So he will act as only trustee, not as a successor. Later, the real legal heirs will go to the court of law, get the probate, then the name will get changed. Supreme Court also say that MCA, whatever it says, MCA, yes, we agree for your view. Even though they have written the 72 subsection 3 says, notwithstanding anything contained in any other law, probate, gebate, everything they say, it is only for limited purpose of succeeding the folio, not the succeeding the property to the estate of the deceased person. That is not the idea. So here also, same way, this nominee, even that while making the law, J.J. Irani committee also says clearly, his duty is there to succeed, because company cannot go without shareholder. So company, I am giving a purpose of succession. Person may come, person may go, but it should continue. Person should step in at early time. They gave some 30 days time to ensure this nominee comes into the board. So that is the whole idea of this incapability, whatever. There are few sections. So by and large, entire Companies Act is applicable to the OPC. Few sections are there, few they are said clearly with some exceptions. So by and large, like section 2, it speaks about the definition, and then 3 speaks about the incorporation, 4 speaks about the MOA and AOA, and section 12 speaks about the registered office address of the company, where you should clearly indicate below the registered office address, you should clearly indicate like I am OPC. But earlier they were creating OPC without having acronym in the name of the OPC. Now they are also asking to put the OPC, like private limited company. They are asking you put the OPC, but without that also you can incorporate. If you have incorporated without that, now below the name there is a one tagline kind you should have it saying that is a OPC. That is exactly section 12 says. The 92 is all about annual return to be filed with one signature, that is one director can sign if there is only one director. And 96 about the AGM clearly says that you don't need to have the AGM physically conducted, you ensure that member signs the minutes, that is the AGM. Similarly, 134 speaks about the board's report, how they are given an abridged format for the small companies and also OPCs. Then 137 speaks about filing a balance sheet with ROC. Again, it can be signed once they are signed. Once they are signed by the member, it is considered adopted. So based on that, you should file within 180 days time from the closure of the financial year. It is not like regular companies wherein we conduct AGM by September, that is 6 months, not even 180 days, beyond 180 days. So 180 days comes around 27th of September. So the due date for filing the form here for annual return of this OPC is September 27th. Before that, you should get the audit. Before that, you should get the signed by the member, like adopted. One resolution should be passed and recorded in the minutes. So that is exactly the 137 says, and 149 is about the auditor. So for this company also auditor appointment is there for 5 years once. Since there is no meeting, but minutes should be recorded. As if one person, he can sign and say I am appointing XYZ as an auditor of the company, and the auditor will be there for 5 years. And now what has happened, I will tell you on this other slide, that they have removed some threshold limits to growth. That is another area. In fact, why this concept is not taken up. The concept is why is not taken up, that initially the Parliament has made law clearly that you can create OPC for any company, for any activity or anything for that matter, and don't put any structural restriction. However, this ministry felt something, if I leave it, if without regulation, then they will do whatever they want, so we don't want. We slowly will release the, tightening the loop, whatever they did tighten initially, then they slowly remove it. Because of that, the 10,000 had come into place. Earlier, there was structural restriction. You cannot have more than 50 lakhs as your paid up capital or 2 crores as your turnover. If you cross this either of the limit, immediately you should convert into private limited. Mandatorily, they say you cease to be OPC. And I will ensure that you are a private limited company. You bring one more member, you bring another shareholder, another director like that. That structural limit they have removed from 1st April 2014. So that I will explain you further once we get into that. And 152 again it speaks about how many number of directors that you should have with the one director for OPC. And 173 speaks about the board meeting minutes. A board meeting, how many board meetings, like a regular company you need to have one first board meeting within 30 days, after that 4 board meetings every calendar year. Here they say first board meeting is must, then thereafter every calendar year 2 board meetings, and a gap of between them 90 days gap you should ensure. You should not, 2 board meeting only you are keeping, but 90 days gap should not. You should ensure that gap should be minimum 90 days. So that is a requirement that speaks about 179, and this another 122 is missing. 122 says that how minutes should be recorded. It may be board meeting, it may be general meeting, how minutes should be recorded, it is missing there. And 183 speaks about whether one person can enter into contract with the company. Can he enter? So this 193 says clearly you can enter contracts with the company. One side you are there, other side also you are there. Both you can enter. So he says that once board of directors sign it is a contract. Over. So there is one condition is there. 446B is again latest modification to that, wherein they say company defaults, this OPC defaults for various provisions of that, penalty that generally levied to any other company, for the OPC it will be half of it. There is a 1 rupee here, they will say 50 paise. That's the one. So these, excluding these few sections, in all other sections OPC also should comply with the Companies Act. Of course, OPC can take the exemptions of all the privileges of private limited company. Private limited company, there is a 5th June circular is there, that based on that you can take exemption. And next thing they speak more about the OPC is there in the incorporation rules, rule 3, 4, 5, 6 are there. So that I will explain over here. So as per the law, what they decided, who can create OPC? They said only natural person who is an Indian citizen. Right now this concept is extended to the only Indian citizens. He should be like a natural person and Indian citizen. So the structural changes which I told you, they made it in 1st April 2021 was, earlier the residentship is not mandatory. Earlier the person should be resident of India. That was a requirement of law. Resident means in the income tax also you say 182 days. Here again they changed. It was 182 days was there. Now they made it 120 days in a financial year. So for this residential means is 120 days only, not 180 days. So again they added whether you are resident or not, you are entitled to create a company. So people creating, especially Dubai and other places, they are staying there only. Okay, and they may not come to India, but they have created companies in India. So that is the one aspect, a very structural aspect. Because of that, what I told you, 10,000 OPCs were created. They have even opened the FDI also. Now FDI, that fellow, repatriation also is allowed. So because of that, This concept is increasing. One more another structural change I will let you know that if government should do it. So that is the one requirement. So you should be natural person and resident, or citizen, Indian citizen, but you need not be resident in India. You can create a company. So as I told, why nominee? I told you clearly, in case of member's death or incapacity to contract, the nominee becomes the member automatically. As I told, 72, which is a regular nomination process, that is not applicable here. And who can be nominee again? The person should have same capability to become a member, no? So same, for member also same requirement, nominee also same requirement. Means again he should be natural person who is an Indian citizen, and then whether he is a resident or not is immaterial. Again he should have been a, in the previous year, 120 days also is not a mandatory. If he is there also okay, if not there also okay, nominee also. That means technically you can run a company sitting somewhere else and you have address in India. Why they are giving an address in India? Based on your registered office address, you will get a tax to government. That is the whole idea. Because people used to evade all the taxes, having business somewhere else, they may not raise invoice. Now, this is the one route you can do, single person. And single director, as I told you, one director is enough. You don't need to. That director again is a requirement of the law. He should be resident in India. In any financial year, 182 days. Not 122 days. This is the requirement for every company. Not only OPC, for all company, same 182 days in a financial year. Because this is the basically that Bhopal tragedy gas. Till date we are unable to catch hold those guys. That carbon, all those things, companies were, they are not able to go. So because of that only they made it. Now every company should have one resident director who is responsible for the day-to-day compliance, and in the event he can be caught. That is the whole idea. So that is the reason director should be resident in India and need not be citizen of India. So I can deploy foreign person in India and he can stay here only. Now we are working on director, is what is that, Japan director. So that is the, you can make him. And the member also himself can be director. But the problem, if he becomes a director, he should stay in 182 days. That condition also should be, because he is wearing two caps, one as a member, other as a director. So both he should satisfy the 182 days in a financial year. Otherwise, he can make someone else. Now here the digital signature both should have. Member and nominee both should have. Now everything is digitally signed. However, if they are not directors, see in this company, member also can be a director, nominee also can be a director, and if they are director, they should hold DIN numbers. If they are not director, they don't need to hold the DIN number. They can appoint someone else as the director. How many you can create? See, initially government thought let us allow the 5 each individual. That was the policy initially. In the year 2014, MCA thought of creating 5 OPs for each individual. I don't know, somehow they didn't accept it. They said that let us allow only one OPC, or one OPC, or one nominee in one OPC, either, not even both. Okay, that was a problem. So then there was a issue. They say suppose wife and husband are there and they have created one OPC, wife creates one OPC and husband creates one OPC. Suppose if either of them no more, then who will take care of that? So that time what happened, government says okay, let us allow, you can be member in one OPC and also nominee in one OPC. So wife can be nominee for husband's OPC, husband can be nominee for wife's OPC. That is allowed now. So you can continue like that. Moment if some other person is no more, then you will step in shoe of the member. You can continue as a member in both the companies in that situation only for 180 days. After that you should find a successor and change the name. That is a requirement. In incorporation, see, what is the process of nomination? As I told you, initially at incorporation stage itself, we will incorporate the name of the nominee at the MOA itself. And nominee will give his consent in INC 4 form. Subsequently also, you can change the member also can be changed, nominee also can be changed. So you need to understand here, if you go to the regular companies, if you transfer the shares in any company, you don't need to file any form with ROC for share transfer. You will file only the data of the share transfer only in the annual return that you file yearly once. You consolidate all the share transfers and provide in the annual return. Whereas in this case, whenever the one member he wants leave it the company, he wants sell the company to someone else, so he will sign the share transfer form. He should also file one form called INC 4 saying that I am leaving this company and someone else is stepping stone. So that form should be filed. If there is a change in the member or change in the nominee, both the cases you should file the INC 4 form. Similarly, I can remove my nominee also. See, when I get a nominee, I don't need his consent to remove. Nominee is something, is like my agent. So I don't need his consent to remove. So you can remove the nominee whenever you want it. You can appoint someone else also. Give the 15 days notice to the nominee. Nominee also can get rid of. Say, I don't want your nomineeship. You can also give a notice to company and also the member. Within 15 days he can relieve. And company has to find another 15 days, means the member has to find another nominee within next 15 days, and you file the form with the government in next 30 days time. So this is the change. So nominee should continue to be there. You can't have the company without nominee. What kind of business it can do? Law says clearly you can form this OPC for doing any lawful purpose. Any lawful purpose. However, they have identified few cases that you can't do it. One is you can't be a Section 8 company, that is charitable, religious or something, it is like a non-profit company, NPA. You cannot have non-profit company. Means one OPC cannot be a non-profit company, it should be only profit company. Similarly, OPC is not allowed to carry on the NBFC activities. It cannot carry on the NBFC activities. Similarly, OPC cannot invest the shares in the other body corporate. You cannot invest the shares in other body corporate. So that is the one what I can know. They don't want to create subsidiaries. They don't want you to create associate companies. They don't want to create any type of investment in any companies. They want to ensure the OPC is not entangled with the layers of companies. That they don't want it. They say that it should be a standalone company. That is the whole idea. However, right now it is not prohibited. You can invest in another partnership firm. You can invest in LLP. Means OPC can do the investment in these two entities. So beyond that you cannot do it. So total, you can't be charity purpose. You can't do the NBFC activity. Suppose I create a OPC and I invest into the stock market, is not allowed. I can't do lending activity. I can't do investment activity. No. No loan company, no investment company. Even RBI also will not give license. There are some forms. If you look at these compliances, in addition to the regular forms, like I told you, almost all sections you have to comply. So whenever you comply those sections, there are some requirements, like either maybe periodical reporting or it may be the event-based reporting. So the periodical reporting, like example, you allot the shares, you should file the pass 3. Like suppose you create a charge, then you should file the charge 1 form. You satisfy the charge 4 form. All those things you should file. In addition to that, like few compliances like that acronym, that OPC, that word OPC is there, no? That should be there wherever you go with your name as a tagline. I need to say I am OPC. And INC 4 is the one extra form that is applicable to the OPC for the change in the membership or change in the nominee purpose that we have explained just now as per section 4. And as I told you, like AOC 4 should be filed within 180 days, not beyond that. 180 days from the closure of the financial year. That I told you clearly that 27 September, in fact in the Corona time, they have not allowed OPCs to file form delay. So we paid a lot of penalties for that. We didn't know that like any other company, we also got audited balance sheet at the late, and we filed at very late, and then filing fees is collected from the September onwards. So that is the issue. So that one is the very lacuna, and then OPC should file annual return in MGT 7 form, which is a very small means compared to the MGT 7, this form has less data. So it should be filed within 60 days from date of September every year. So there is some lacuna. Technically, section says that you should file after AGM. So moment you say I have signed my balance sheet, that is the deemed. Once you signed a balance sheet adopted by the member, from that deeming date, you should file this MGT7 within 60 days. So one should careful, like when you sign that date, is relevant. And CSR2, DPT3, these are the depending upon transactions that the OPC has. OPC also now I told you they have removed the limits, so it can grow any extent. It can create even 5 crores profit also. There is no problem. You continue to be OPC, you can still create 5 crores profit. If there is a 5 crores profit, you need to ensure that you are complying with the CSR provision. So CSR2 also will come. DPT3, you all know that certain business transactions, including OPC member also can give loan to the company. So for this, DPT3 should be filed. DI return, of course, for the change of director should file. And ADT1, of course, this is for the, since some mistake is there, it is for auditor, not director. So auditor change, 5 years once you should file this form also, ADT1. That again, what is the due date? Whenever you sign annual return, balance sheet as a member, that is a appointed date. And then from that date, within 15 days, you should file the ADT1. So be careful while filing these forms being a OPC. Next charge forms I told you, pass 3 for allotment. So these are the compliances. I will take you next level, contract with the sole member. This is exactly I told you that sole member can enter into contract with the OPC. So that is allowed by the law. Okay. So sole member who is also director may enter into contract between the company, and if the contract is in writing, so what they say, if the contract is in writing, then there is no requirement. If the contract is not in writing, then it should have been incorporated those terms in your MOA. If it is not incorporated, those terms are not incorporated in MOA, it should be entered in the first board meeting after it is entered. Once you enter in the board meeting, then you should file a one form MGT 14 within 15 days from the date of entering into the contract with the member. So no other section, only 2 sections says, one is the ADT1, 15 days is there, and other form here 15 days is there. All other forms are 30 days time. So in the Companies Act, only these 2 forms we are supposed to file 15 days time. If the contract is there in the ordinary course of business, so ordinary course of business is something you just randomly and ordinary course without venturing into any contract and all. And if you go with what is that called ordinary course at arm's length deal, then that contract need not be filed with the government. Means with the MCA is not required. That is an ordinary course. See, this is the one section, as I told you, 122. This section is very crucial. How to record the minutes of the one member, how to record the minutes of the one member board. So passing of ordinary resolutions, passing of ordinary businesses. So ordinary businesses, you all know that in every AGM there are 4 ordinary businesses. One is the accounts approval, then dividend declaration, then director's appointment, then declaration of auditor appointment and payment of revenue. These are 4 called ordinary businesses. Any other item that you want to pass, then you should call it as a special business. For special business, there should be explanatory statement. That is the difference between the ordinary business and the special business. And types of resolutions, you will have the 2 types of resolution. You know that one is ordinary resolution, that means where the simple majority is there, and other one is the special resolution. So law requires certain businesses should be conducted through the special business, special resolution, certain businesses through the ordinary resolution. In both the cases, it is only one member. If he signs, you treat that as ordinary business, treat that as special business. But in the special business, we should clearly indicate that the resolution is passed as a special. The member should sign. In the ordinary business, you can say or not say that as ordinary resolution, it is okay, fine. Now, how it will be passed? It is sufficient if communicated by the member to the company. So the shareholder has to give the resolution to the company. He should prepare and give to the company, and that resolution should be entered in the minutes and should be signed and should be dated. See, 3, These four things you should do it. One is that communication should come from the member, then entered in the minute sheet, and then signed by the member and dated in the minutes. Then date of signing will be considered as a date of meeting for the purpose of the act. Whenever he signs, whenever he puts his signature over there, that is the date of passing of the resolution. Generally, when same day, when he gives resolution, same day you can enter, same day you can get his signature. All those things can happen. So if it is an urgency, same day you should sign and put the date. Then that is effective. And the same rule is applicable for all types of businesses like AGM resolutions or EGM resolutions. Technically, you don't need to have the meeting. The same process will be applicable for the board meetings also if there is only one director. So OPC can have only one director. You don't need to have it, but you can have more number also. There is no prohibition that they should not have one member. They can have more members also. That is allowed. Only member, only one. Directors can be multiple persons. That is, when you have multiple persons, then you should conduct regular meetings. 122 is not applicable to them. Yeah. So next thing is that, as I told clearly, conversion. So it is a conversion. Earlier, I have in fact one company we have created, and later we found because of the turnover, because of this, then we were supposed to convert. Now, of course, those threshold limits they have removed it. Now, conversion is not a mandatory. Conversion is an option. So, conversion is not mandatory. So, conversion is an option. So, now what is that exactly the conversion? So, they say you cannot convert. When I say conversion, you cannot convert in Section 8 company because you are not allowed to create a Section 8 company. OPC cannot be a Section 8 company. So at the same time, you cannot convert that into Section 8 also. So both ways is prohibited. And similarly, public limited company cannot be directly converted into OPC. So you can't, public limited company cannot be converted into OPC. They say you convert into first private limited company, then you convert into public. That's what the provision is given, but I don't know what was the reason. Yeah. Anything without sugar? Okay. So, public limited company, they are not allowing to be converted as a OPC. They say you convert into private because public to private conversion requires the central government approval. That to regional director, RD office. So, lot of checks and balances are there. They will ensure that during the lifetime of public limited company, sometimes it may be must have been a listed company. After that, delisted. Lot of non-compliances will be there. They want to check, whether it is properly complied from during the life of public limited company, then only it is allowed to convert into private. So that checks, because of that check, they say you cannot convert it to OPC, you just go to the RD and get the approval from there for conversion to private, then thereafter you convert it to oneperson. Okay, first to convert it to OPC, after that you can directly. Whereas reverse conversion, OPC they want to convert that, one man wants to convert into a regular private limited company with 2 people, he can do so. At the same time, is a public limited company also. You can convert again as a public limited company also. There is no problem. So public limited company you can convert, there is no issue. Only what is the conditions? If you look at the conditions, what you are supposed to do it, that is the process of conversion. One is that you should increase the minimum number of members to 2 or 7. So there is a consent letter that you need from the prospective members that they are okay to join with you as a members in this company. That means either you transfer your shares to them. Like suppose I am holding 10,000 shares, I can transfer 1,000 shares. That is also allowed. Or I agree to allot the new shares. That is also allowed. Both way you can increase the number. Similarly, minimum directors. So 2 directors you need to enhance if you don't have. If you have got 1 director. In case of public, if you want to convert, then you need to ensure 3 directors are there. Then alter the MOA and AOA. In alter the MOA and AOA means if you look at the OPC, there are certain provisions that we should incorporate in the MOA and AOA to ensure that yours is a OPC. One such is the definition of public and private limited company where it says the number can be up to 200. Member of the number it can be up to 200. In OPC you should clearly record it. I will have only 1 member. And the definition of private company allows the ex-employees and current employees to continue as a shareholders of my company. Though my 200 number is restricted, but employees are exempted. Here employees also cannot be. One member, no one member. So now you should remove the definition and you incorporate a proper private limited company definition. Similarly, lot of restrictions must have been put in by the member. So those restrictions should be left open and make that is a public or private MOA and AOA. So that is alteration, you should do it. And if you have got creditors, that means you must have got credit supplies or capital supply. You must have loan banks and from the banks or financial institutions, being a OPC. So you should get their consent before you move to the conversion process. Then affidavit from all the members accepting the conversion. This is basically reverse conversion. This affidavit is applicable in case of reverse conversion, like private company converting into public. All members, they should agree they are going to transfer their shares to one person. But we don't know. Here I have a problem as income tax angle. You all know that 50% and above shares are transferred in a private limited company to, there is a capital. If there is a loss will not be carried forward. Whether government has made enough provision, but right now there is no enough provision. So you are allowing the conversion, a private limited company to get converted. I will give an example. You will understand. Suppose there is a private limited company and in that there is a property. Property worth 10 crores. Now 5 shareholders are there. Now I want to convert that. This one member wants to acquire that property. So all the 9 shareholders, they say we will transfer those shares to you. Or whatever the rate price. Assume that all family members are, of course. Family members, of course, capital gain also is not there. If you are able to prove that between the close circle. Of course, they want to do it through this route. And they can transfer shares to this gentleman. And he will be owner absolutely for the entire building. What he has shaved? He has shaved the stamp duty. Property need not be transferred in the books of the sub-register office. You got my point? Because the property will continue to be in the name of a person, company only. Property will continue to be company name. Correct? No, tomorrow he wants to give that property, he will not execute the sale deed. What he will do? He will simply transfer the shares. And the person or company holding that property will go to you. Are you paying stamp duty? What is the rate of stamp duty for property transfer? 6%. Assume 10 crores into 6%, how much will come? 60 lakhs you will save. Huge. Just I am giving you example. So that this structure can be used for the purpose of property transfer, like regular company they are doing. Suppose the OPC or any other private limited company has a loss, and if it is allowed through this structure, and that income tax, if you look at, there is no provision for the carry forward losses if the 50% shares are getting transferred of any closely held company. So you will lose that. So that means people will not do the conversions. I'm just thinking, I'm just giving loudly to you. These are structural changes. In fact, we do a lot of mergers amalgamations. These are the structural changes we can think. In fact, recently I am doing a case where the voluntary liquidation of a private limited company, and around 4 shareholders are there. Our 4 shareholders are the they have got the company has got around 2 acres land, which is a prime location. Now we are distributing. There is a Supreme Court judgment. We are distributing the property in their proportionate shares, and we are just trying to convince the sub-register office also. There are precedents, because it is like a family, what is that called, partition, like a family party. There is Supreme Court judgment also in this aspect. It is as good as shareholder coming together doing the business. Now he is taking back his share. The share may be in the form of property, but share need not be in the cash amount. You can take your share back and no need to pay tax. That is the stamp duty. Similarly, for the capital gain tax, if you look at the capital gain tax also, they say that capital gain provision like 46, 47 not applicable. They give one formula, this in case of property is distributed in the liquidation process of a company, Then they have said what is the consideration that you have received, what you have invested. They are given some market value, all those things. If you look at that formula, the technical there will not be any tax.
Will income tax officers not look into this and then come back and then make some?
No, it is there in the existing law. Income tax also I am giving notice. It's not that we are not doing. There is separate provision for property distributed during the liquidation. Separate provision is there.
If lot of conversions happen through this route, then income tax department might amend that.
We don't know. We have to see that. Right now, that route itself is not open.
I know.
I'm just giving an idea. So there are probabilities are there. It may be a tax, not evasion technically. It is a tax. What you can say, planning also. It can be. And then conversion form is the one is called INC 6. INC 6 basically who is coming, who is going. That's basically they collect the data of the person who is entering, data of the person who is going. Similar their nominee, all those stuff they will collect. And if they satisfy all the requirements of other laws regulations, then ROC will examine. This is the one recently they have added. At latest, I can tell you what latest is 19th January 2023. 19th January 2023, they have modified the law saying that ROC is to examine each and every balance sheet before allowing the conversion. Now they started scrutinizing balance sheet. Not for this alone. I am not talking only OPC. For all other corporate action that you take, like suppose you want to go for change of name of any company, if you want to add object clause, or if you want to shift the registered office from one place to other state, within the state or outside the state, or if you want to reduce your capital, increase your capital, buy back, all the corporate actions where the ROC approval is needed, first document they say, first examine the audited balance sheet and serve the notice under section 206 and seek the information. You keep these assignments aside and do that exercise, and if you satisfy with the balance sheet, then you ensure this compliance, otherwise don't. That is the requirement. You see that one. Yeah, you can have it. Yeah. So ROS will issue a conversion certificate. Once he approves the form, he will issue a conversion certificate saying that today onwards you are a OPC, or today onwards you are a pure private limited company, or today onwards you are a public company. Yeah, these were the limits killing this concept till 1st April 2021. From 2014 to till 21, around 7-8 years, as I told clearly, that there were structural limits. They want to restrict the growth of the OPCs further. They say if I allow phenomenal growth, then they may not be in control. That was government thought. So government said let us put the restriction for the paid-up capital or turnover. So earlier the requirement was there 50 lakhs or 2 crores. Then you should convert into mandatorily regular private limited. They say we will recognize you as a OPC. That's what the rule says. This was omitted now. Earlier, if you don't touch these limits, if you want to convert it to other class of companies, that conversion was optional. So now conversion, deconversion, everything is optional. That continue to be their name will be same country. Only OPC will be added or OPC will be removed. That's all. So that is the reason you see these structural changes, and maybe probably people would not have aware of these structural changes, but people like especially Bombay and New Delhi, Gujarat, now they are aware of it, how to use this system. Because of that only in the 2021-22 alone, as per the MCA data bank, around 11,000 LLPs, OBCs were created. Out of total 44,000, in the year 21-22 alone, around 11,000 were created. That means now you see maybe in Bangalore people would not have, I've seen few up there, but people would not have aware of these changes. The propaganda is not done properly. Now from 1st April January 2023, they made further more modifications. After that again it is, maybe government at least in this budget they should have done it as far as the taxation is concerned. Then concept would have been more. Now we have seen many people are coming forward to create companies, especially startup. That guy will come with some idea that I want to create one startup. So I am looking for a funding. So initially, even in the startup cases, if you get a startup license, you can fund through a convertible note. You don't need to be shareholder. Next 10 years. So this OPC can be a what is that, one person company for next 10 years. Whenever the conversion period comes, that time I will convert into company. That is allowed. But only thing is now the taxation issues should come. Taxation issues should come. In fact, when they release the concept of LLPs, initially 2-3 years they have not touched the taxation issues. Now probably government, I am just thinking, the government may come with the good taxation issues so that it will encourage the people to create OPCs. Whole idea is government want to make these one-person businesses seem to come into the main board. Like because of GSTC, now the collections are improved. If you allow them to get into the OPC, and then you see the data bank that is available with ROC, data that you have got it, like you have got 26 years, in case of income tax, then you have annual data is available. So many things are available once at your company, then I don't think anyone escapes from the taxes. Today is happening. Today, of course, because of the corona, thanks to corona, many things are happening. Small shops also getting into the bank revenues. Through banks, they are collecting like Paytm, BTM, also. Some revenues are improved because of that one. Because once you get into bank, you cannot say it is not my turnover. You don't have any option. You should declare some percentage wise, like 8% or whatever it is. And if you allow, that's what the government should think loudly. If you allow them to get some tax advantages, being this structure, like you allow the what is that called 10-15% tax for the new companies and the incorporated company, put them this OPCs also, and you get the same taxation. But I also allow you to get into the dividend tax advantage. That's what I am encouraging. I want to recommend to the government. You say that OPC declares the dividend, there is no tax in the hands of the recipients. Make it, because it's a single person business it is. And you are allowing the same the advantage to the what is that called LLPs and also regular partnership firms. So section 1010 allows you to get exemption. Why can't? That is the one. That is exactly I am just yeah. The government should allow more people to board in.
So that they will not be going out of the regulation.
Once get into network, you have so many things to do with them. How to regulate, you know that. See, today the crowd is not orderly regulated. So you are thinking that crowd should not be allowed. You allow the crowd.
Then
yes.
You can think of.
Yes. That's something that loud thought process should be there. Not like what is that confused thought process. Right. That I don't recommend.
It's like you don't do all these things. Instead of that, just say okay.
Yeah. You come in. I welcome you. You keep that to come in. Then what will happen? Slowly everything will come into the bank network. Once you come to the bank network, you even there was a proposal, you remove the GST or the income tax. Put that bank drawal tax or whatever it is that you ensure that you get some 5% out of it over. See, I'll tell you, see how it works. It is like if you improve the system and allow that particular taxation network, like suppose a patient with IV, We don't know what injection on pain also. No pain, no, you don't know. The doctor will come and put an injection. You don't know what is the pain of it. So if you inject the system and allow that your cake is cutting from there directly, then he doesn't know anything. See, he thinks always, okay, what I am getting in my account, this much goes to government, this much I will get. That's all. Something, very, very
professional
loud.
opportunities will come down for
Many?
company
No.
secretaries and chartered
No,
accountants.
professional opportunity will increase, I'll tell you. See, I'll tell you. See,
This taxation part.
you look at the VR, maybe 2 to 2.5 lakh. Maybe in all three professionals or whatever you consider, maybe 4 lakhs maximum number is. But if this number, that OPC number is growing to crores together, suppose, the number growth, I don't think we can solve. And we being our internal regulation, we cannot pass our members to that extent.
Correct.
To match the demand and supply. No, I don't think we can do so. But we don't need help each and every person. Let them work on them. Whenever there is a problem, he will come to you. You work as a, what is that called, assignment basis. You don't work as a retainer kind basis. So when there is an issue, that time he will come. So whenever there is issue, he will come to you. So you don't need to worry about that. He should be there with me throughout the year and all. No, not like that. You work as a consultant, rather what is that? Advisor, regular advisor or whatever. So few points of being LLP we will discuss now. Sorry, being OPC we will discuss now. See, one is that rights issue, because you are supposed to ensure only one member, so you can't offer shares to outsider. So there are provisions how to offer shares to outsider. One is the private placement is there, other one is the preferential allotment. Both the cases you can't do it. There is nowhere that you use those provisions. Provisions are there, but you can't use them. That route is not available to you. So what next route is available? If you want to increase your capital, you only should bring in. That is called rights issue. No, only shares will be allotted through rights issue only, not through the private placement or preferential allotment. If the shares are allotted to the rights issue, you don't need to go for a valuation. So you can allot share at par at any point of time. If the shares are at par, then there is no taxation, I believe. There is no premium taxation, income tax like 56.6 is there, no 27 something. There is no premium taxation. If shares allotted at par, not with the fair market value and all, you allotted it, this is rights issue, there is no taxation. This also you have to examine, this one. And then once you allot the shares, there is no, see why they tax you, because there is a dilution. If you allot the shares to someone else, that person is supposed to bring the equal share. Then only dilution is permitted. Here there is no dilution. Same person is today is 100%, tomorrow also he will be 100%. Today he has got 10 lakhs, tomorrow he will bring another 10 lakhs. He will continue to be the same 100%. So income tax also will not come. Like you can issue bonus shares, dividend also can be given like any other normal company. Bonus also can be given, since without cash you increase the number of shares. Suppose bank wants to have some permanent capital, you convert some accumulated profits into shares and say now I have got paid up this much, I can't take it out. So you also give some money like that. Similarly, dividend can be declared as per the regular company. And preference shares also can be issued. In OPC, preference shares also can be issued. Again, catch is that preference shares should be issued to the only same member, because the law says member. And if you go to the definition of member, both equity preference both are considered to be member. It says definition is one member. So you should satisfy that. So that is the reason even preference shares should be issued to him only, nothing else. It is technically sole man versus sole man. That case you know that. Now he is a shareholder, he is a preference shareholder, he is a debenture holder. And then company goes for liquidation and he will come in the priority as a debenture holder and he will get that money. And he will come for next priority before any other creditor is paid. So they say that he is the same man who has cheated the company. Now you are giving priority for his payment. He says company, and you are wearing so many caps. So one cap as a director, one cap as a shareholder, other as a preference shareholder, other as debenture holder. So law recognizes debenture holder. Debenture holder is putting all together. So I cannot simply say since he is a director, he is a shareholder, he will not be paid. No. Even today, Section 53 of the IBC also speaks the same way. Even today, unless the fraud is proved, you should prove that there was a fraud. So suppose same person has lended money to the company who is a promoter, and he has lended, and that lending, whatever it is, unsecured or secured. If he is a secured is there, then he will come after the liquidation cost, after the workman, he will get the money. If it is a secured one. He may be a promoter, he may be a director, he may be shareholder, doesn't matter. Even today, I am talking about IBC. IBC also recognized Solomon case. They have not deviated from the Solomon case, 1800 case. So similarly, suppose he is unsecured creditor. Financial creditor means he sent the money, he has put the money. He will be paid in advance when compared to the other suppliers. NCLT also will say okay, because the law is very clear. Section 53 waterfall mechanism says clearly you will be recognized. So this not deviated at all. Till today also the same rule. So that is the reason preference shares also should be allotted to the same person. ESOPs cannot be given, sweat equity also cannot be issued. ESOPs whom are intended to issue to the employees or the directors. Okay, ESOPs again they say you can't create a new member. Potential member, no? ESOP fellow is a potential. Today he may not be a member, after 1 year or 6 months, after 2 years he will be member. I cannot deny the rights. That is the ESOPs cannot be given. Sweat equity, again sweat equity is given to the employees or the directors who have contributed their sweat. But there is a restriction in the sweat equity. If the person is already holding 10% shares in the company, being a director of the company, he cannot be given further, something like that. Now because of the startup companies, government has made a rule, up to 50% if you already existing shareholder, till you can participate like that is written. But here he is the only member, he is the only director. And 100% is holding, so sweat is not permitted. That way, as another important thing I told you, 2 board meetings you have to show on the paper with a gap of 90 days enough. That is enough, the compliance, good compliance. And cash flow statement is exempted, means you can prepare if you want, if you don't want, that's all. They say need not prepare. In other case it is written shall prepare, for OPC you say it says may prepare, it says may prepare. Then board report again it goes to the abridged format, in a small simple concise format. In other case board report will have around 35 to 40 points will be there. Here will be around I think 15 to 60 points, half of that will be there. This already I explained you that annual return can be signed by only one director if there is only one director. If there is a company secretary, so company secretary you can go, I told no, if you got a capital of 10 crores and above being an OPC, you need to have a company secretary. And either company secretary or director can sign the annual return. So that growth is also there, they are permitted. You can have an OPC with 10 crores also. You should be net worth, high net worth individuals may have the 10 crores capital. Nowadays 10 crores is not a big deal. Similarly, financial statement, board reports can be signed by only one person. Then penalties I have already explained you. Penalties are there throughout the act. See, there are 2 types of penalties in the Companies Act. One is a fine, other one is a penalty. 2 words are used throughout the Companies Act. Fine and the penalty. They are not interchangeable. They are not exchangeable. The fine has its own purpose, the penalty has its own purpose. Fine is considered to be a criminal offence as per the Companies Act is concerned. Wherever the word fine is there, it is a criminal offence. And wherever the penalty is there, it is a civil wrong, civil default. You should not even call it an offence. And throughout the act, they have written clearly, fine means they said either violation word is there or they use the word offence. When it comes to the penalty word, they say default. So very categorically, cleverly they have drafted this Companies Act. So earlier, prior to the 2nd November 2018, in out of 470 sections, total we have 470 sections. Only few, around 10-15 sections are having the word penalty. That means civil wrongs. Only few were there. However, from 2nd November 2018, they have shifted most of the provisions from criminal offence to penalties. Now you will find penalty everywhere. Throughout the act you will find penalty. Only around 10 to 15 sections have the word fine. If the fine there, ROC will go to the court, drag you to the court. If the penalty is there, ROC internally, like there is a tedious delay, they put heavily 100-200 rupees, they will send a notice that you don't have any option, you should pay it. There is a payment delay or interest is paid. If the return is delayed, filing the tedious, then you will be added. It means auto calculation. So penalties are auto calculated. No mechanism. They will provide an opportunity to you be heard, but still they will levy the minimum. They will not reduce. Recently I had one case. There was some disclosure at board's report and disclosure at the financial statement, but 3 consecutive years mistakes were there. Okay, that is a fine, penalty word is there, both the cases. That is 129 and section 134. Both the cases, penalty word is there, and the penalty says minimum 50,000 per person, and that section says all directors and company. And unfortunately that company having just 1 lakh capital, but it was subsidiary of other company. If you become a subsidiary of other company, you will get rid of the special status called a small company. You are not a small company. So he said, I don't have an option to reduce 50 to 25,000. He has levied for both the sections together 15 lakhs. 1 lakh paid up capital. He says, I don't have any option. I have only mechanical calculation to just calculate and levy, that's all. Now they started levying. They have collected, I think for last 1-2 years, Ministry has collected 2,000 crores from this kind. They started now. Recently I will tell you, I think you guys must have, or your client must have got the notices for the delay in filing Ben 2. Ben 2, that is the beneficial interest form. Ben 2, very recently. In fact, in my client case, they have levied around 8 lakhs. And that too faceless office. You don't know who has issued that notice also. They put some jurisdiction officer, then someone else issues the notice, and jurisdiction officer he says, I don't know, I have not issued this notice. So it had come from Delhi. Delhi they have opened one central processing cell. In-house, only to levy penalty. And they say that we will provide you online access when the case comes for hearing, and you come with your lawyer online or company secretary or anyone, you explain. And if we are satisfied, we may not reduce minimum, but there is a probability we will hear you. And they will hear you, they will levy the same. Then after that you should go for an appeal. In the appeal, there is a provision to the appellate authority, who is a regional director at Hyderabad or something, around 4-6 places you have director, and he has a power to reduce the penalty. Then it is again cumbersome process. You go there, all those stuff are done. So now companies, if you, that I told no, what they have done it, one statement they have not made in the board's report. Company has complied applicable accounting standards, applicable secretary standard. This statement was not there. That's all. Only for this statement they have not made. For that they caught. Similarly, one more statement was there in the financial statement. If you have given a loan to any person, the person what purpose the loan is used should be mentioned in your financials. That is written in the notes in the section 186 subsection 4. Purpose should be captured in the financial statement. Why you have given loan to him? what he has done with that loan. That should be captured. You don't find where it is exactly, but ROC people could find it. So any balance sheet you capture it, you find that you don't find any purpose why they have taken this loan and all. We don't disclose anywhere. Simply we go with the loans in advance will be there, then the subsidiary will have that person name, and there is no description that you do for that below. What purpose the loan is given? No. So they catch hold of that ask. If you look in that angle, anything can be caught. Balance sheet should be pakka now. Now 50 lakhs we are unable to pay, now we are going for winding up. So that is the word fine, that is a penalty and fine. Penalty, though it is a civil wrong, they say we will loot you. And I have not given any discretion power to the officer to think. I gave some measurement stick I gave, he has to measure and then levy. That's it. Automatic. And they have clearly stated in the order, the fine should not, the penalty should not be paid from the resource of the company, should be paid from the person who is liable to compliance. Directors are supposed to be paid, and auditor next year in the audit report they should comment whether this penalty imposed by the government is paid by personal packet or from the company resources. And there is annual report every year, this you have to report. That MGT 7 format we should report. Day by day we are getting into the unwarranted in detail in report. No, ROC fortunately or unfortunately is under the Ministry of Finance. Now they look at only revenue, not a cost center. ROC is not a cost center for them. It is a revenue center. That is the idea. This I am allowing you to operate like you are an animal. Company is an animal, I am operating you. You should behave as per the rules of the society. If you don't do, I will just punish you. That's all. That is exactly it. As simple as they are going like that, they say that we are moving towards the Western world. I will allow you. I will not put in jail. I will allow you. Keep roam here and there. I will just put the camera. I will see whether you are jumping the signal or not from the camera, and I will send the notices. And if you want to go cross next signal, meantime someone will come block your car, saying that you are not paid the penalty. Oh, you have to pay. Put Paytm, BTM, online, immediately pay smart pay, and then I will release for next signal. It is going to happen even for the companies also. So they say we don't want to court. Court, they say it will take a lot of years to go to court. I don't want to go to court. So that is it. They took the power completely. They say we are decriminalizing the Companies Act. Decriminalizing. We thought very, very, oh man, very, very, music not to hear decriminalization. Only for the IPO issues, you go to the IPO, public fund is there, only those cases are criminal offences. All other cases they are decriminalized. Out of 470, only 6 sections are there. Saying that they are the criminal sections. All are decriminalized sections. Now they are invoking those provisions against this Baiju and all, the serious fraud investigation, section 212. Now recently because of auditor resignation, independent director resignation, now it's happening. Only for those cases, not all cases. All cases will go silently. Like saline will come and you don't know, align with saline injection also will be there. So that is the issue. So OBC I told clearly that it can be a small company also, now today big company also. Small company today, last year only they defined again. They said 4 crores paid up capital, 40 crores turnover. So till 4 crores and 40 crores we don't cross, I will treat you as small company. And they say clearly, no certification is needed for those forms. No professional should sign those forms. Let director's signature alone will do like that. That then will come back period. See, what they are trying to tell, once you get penalized like this, then you will behave. Yes. We don't want to create artificial, what is that demand? This is situation oriented demand. Be do the all compliances and file your own. You don't have time. Suppose you are time you are spending only in doing your own business, then engage the professionals. I am not asking to engage. Ensure you are compliant. Now in the V3, what we are today is doing, it is artificial intelligence enabled system. Just click away and the day that when two firms, non-compliance, they have sent notices, just at 11 o'clock at midnight, they just click one click, around 10,000 companies got notice. And each company think of it 8 lakhs minimum average. 10,000 companies into 8 lakhs, how much will come? Huh?
Around 1,000.
But in India, not 10,000, no, total 14 lakhs companies are there. The 10,000 companies, they got a data saying that they filed the form, but there is a delay. In few cases, they would not have filed. This is the way government is looking. They say, end of the day, you will also charge this money to your penal account only, no? Again, I am contributing 30% tax there. So that way, we need to, at least in that aspect, if you get a notice like this notice, if you are an OPC, you will be penalized 50% only, not beyond that. Our small company 50% only will levy you. So that is also one aspect. You can look into that. So now today the OPC, I told it can be small, big company, you can grow any extent. There is no restriction for that. And what types of companies you can form being OPC? You can form a company limited by shares. You can form a company limited by guarantee. You can form an unlimited company also. All three types of companies can be formed. But in India, 98% will be company limited by shares. Around 2 to 3% or 2 or less than 2%, you will find company limited by guarantee. I am not finding unlimited companies, maybe 1 or 2, maybe the entire data bank. But limited by guarantee, why they have gone with limited by guarantee? Most of the companies are Section 8 companies. They don't want to put the money because they were on the public fund. They want to be only shareholder, like honorary member. Those kinds of companies. And few companies are there. I know one company secretary in practice he created is limited by guarantee. He doesn't want to put any money. Say my brain is my money. I don't want to put any capital in this company. Zero capital company. That is also, I am the only, means he and his son both are the shareholders over there, and they do all non-certifications, services through that firm, to that company. So they say we have created only guarantee company, which is allowed. And guarantee company fees are zero. You don't pay capital fees to government. So 1 crore, if you want to keep capital fees, around 1 lakh should be paid to government. 1 lakh you save. Like annual returns you file, zero company will pay around 200 and 300 something, not maximum, more than 100 rupees or something. But here 600. Something like that, it goes into multiples of it, 13 times, 14 times. So this way, see, you don't want money, no, it is just you want to use the system for the billing purpose. So that is allowed. So you can create OPC without capital also you can create. It's just knowledge based, no? It's just knowledge based. Suppose you have all foreign customer, you get advance into, and you don't need funding also to it. You can do it. If you want to have it, shares, no, again you need to have a demand, there is a monthly cost, all those things are there. And there is a stamp duty if you have got a share capital, you issue the share certificate, there is a stamp duty to be paid to government. All those things are avoided. So that is the purpose of limited by guarantee. But people are not aware of this exactly provision. Now they think only we can do business with the money, but still you can do like professionals without money also can do it. Our investment is very nominal when compared to that. CARO, of course, CARO rules clearly says that for OPC, irrespective of right now, I am just giving you, as of now that it stands, irrespective of its turnover, irrespective of its, see there are specific exemptions. See how you will read the exemptions in your CARO report. They have identified the category baskets. Correct now? They say that OPC, then Section 8 company, then small company, 3 baskets are there. After that they have created one basket, a private company having this, like turnover 1 crore, this, net worth of 1 crore, all those things. But that basket, they are not properly placed it, saying that this is alternate to this. If you are following either of this bracket, see it is exemption. See how exemption should be read, we should be very clear about it. Exemption should be read to the exemption given for whom? In his benefit. And if you are able to fall into any of the exemptions, suppose there are 4 types of caps are given. If I am able to wear any one of the caps, I'm fine, I'm exempted. Because they are not something like, if you are falling in this 3 also, if you fall in this 1 crore limit, you will be considered as a this falling into 4th bracket, and you have to comply with the tariff. It's not that way you can interpret. I was also doing initially that interpretation. They said that then this particular basket called OPC has no meaning, no? Then nobody will fall into the category. Then why that special category is recognized? It is a special category. So if you use this interpretation, even in your taxation also, the exemptions should be read for the intended section society. See, the exemptions are basically if it is provided to a section or a society or a class or group, it is intended to give some benefit to that class. Intended to give the benefit to that class. And if you don't use that exemption, what will happen? This exemption itself will have no validity. So considering that, my interpretation is that this OPC clearly it falls into that particular, if you take your CARO applicability, that particular order, and it is written clearly, OPC name is there, continue to be there. So I feel even it grows like 4 crores, 40 crores, whatever it is, but it clearly indicates that as per this, unless the CARO comes and amendment, if the government comes amendment, you can still continue to take the exemption. That's what my view, but still it is debatable. Going to the CSR, as I told you, if you go with the threshold limit of 500, 1000 and 5 crores, then you will be being OPC, doesn't matter, because the every company, that is 135 says the word every company falling into category, you need to have the compliance of the CSR activity. Like the next one, like any other provision, the auditor appointment is mandatory. So OPC also should appoint an auditor depending upon the category. Like example, you met a criteria of paid up capital of 50 crores, or if you met a criteria of 50 crores loan, either by bank loans or public financial institutions. Of course, you can't take the public deposits, because OPC is not allowed. It's not a public company. It cannot take the public deposit, but it can take the bank loans and financial institutions. If that loan is more than 50 crores. Or your paid up capital itself is more than 50 crores, then auditor rotation is mandatory for even OPC also. That's what exactly, like any other private company. Then you go to next provision, related party transactions. So one section like 193 deals with only one category, where the member himself is also director. Then dealing with the director, they are given one formula that you get the signature and all. But if you look at the section 188, which deals with the related parties and the transactions, that section doesn't exempt the private limited company also. Okay, only some relations are exempt, like group, subsidiary, holding relation you have. So that section is exempted. But this company cannot have holding subsidiary. So that means you have to comply the 188. Means related party transaction section is to be complied by the OPC as well. Suppose you want to engage some relatives, then you have to comply with the requirement of the section. Similarly, if you want to engage some relative as a supplier, you have to comply the section. Office supply some profit, you have to comply the section. These things you have to comply the section. That's what the interpretation goes, because there is no specific exemption. Like I told clearly, it can borrow the money. There is no restriction from borrowing banks and financial institutions from other companies also. Like any other company, it cannot borrow from the individuals. So borrowing from individual is prohibited as per the deposit rule. However, you can borrow from these three, like bank, financial institution, other company. It cannot issue the convertible instrument. Like I told, convertible note it cannot issue. Similarly, convertible debentures or convertible preference shares can be issued, but to the same member. But it can issue convertible debenture, end of the day it should be same member. But outsiders it cannot issue. That is exactly. So same way, cannot borrow loans with an option to convert into capital. If the loan is taken from the member, then you can convert it. Say that I will convert after 4 months, 5 months, you can. But if you are taking loan from outsider or any other company, the conversion cannot be given to them. Then suppose like any other private limited company, if you are appointing a managing director, alternate director, manager, regulated by law, even OPC also should comply that one. However, payment of remuneration like any other private limited company, OPC need not comply with the law. They should go with their own article. As per article you can do. And as far as the minor, is a person capable to enter into contract, that he has no capacity to enter into contract. That is the reason they say minor cannot be a member, minor cannot be a nominee, minor cannot hold beneficial interest also. There is a provision beneficial interest number 89. So he cannot even hold the beneficial interest also in the OPC. The OPC can lend money to the member. Yeah, this is one provision. Because OPC cannot borrow, cannot take the money as investment from other companies. So it will certainly squarely fall into the category of the exemption under section 185. Okay, and similarly section 67 also is not applicable. So you take the money and you can do whatever you want, including you can reinvest into the company also, that is allowed. As per the law that is there as I am giving you. But technically that is not correct. But government has given exemption. So you cannot borrow the money and invest into the company. It is a routing, no routing. It's not allowed in case of public limited company. Private company they say you can do it. That means you can lend the money to the director or shareholder and he can reinvest into the company if they want. By best example, it may be attracted deemed dividend. Suppose that you have accumulated profits, instead of giving dividend you are giving a loan. So there is a deemed dividend concept that may be attracted. That they should keep in mind. And because he is a person holding full percent, no? When he is holding full stake, then suddenly that 15, 20 public interest, all those things will not come. Then similarly, OPC can give a loan guarantee security to the other company or person. It can also give, but it cannot give, it cannot invest into the other body corporate. Because of the rule says it cannot invest in other body corporate. Yeah, these are the issues that I would like to address. We'll close exactly by 8. These are the issues which I told you in my talk. One is the income tax. It should be treated as individual with applicable slabs. Like you have individual, so many slabs are there. It is as good as is making a business. And you are allowing LLP to be treated as a partnership firm. Correct? No, if you look at the definition, partnership firm includes LLP. That's exactly you made the modification to your income tax and say that it is. Why can't you do in case of OPC? You are recognizing one person. Like in the Western countries, if you go to the US and all, as an individual, as an organization, tax rate is similar. Especially LLCs in the US and all. Because I am LLC, I am not taxed extra. Why I am going with the tax with the LLC? That I want to have succession. I will decide succession. Whom I want. If I do business in individual capacity, succession will be decided differently. And US, you don't have a law for succession. Like you have into Succession Act, you have the special laws, special relief act for other communities. But in US, you don't have any into Succession Act. US says, if you have not made any succession plan on your own, and we will take the property as a state. So if you make business or made profit over there and you don't have a persons, and property will go to government. That is the reason in US they will create all like people going to NRI, they create only family trust. And family trust is the trust which can decide about the beneficiaries and which is legally valid. So you go touch any NRI, you will find one family trust. That family trust in turn will invest these kind of businesses with may not one person company, but one person there also should be individual only, but maybe other entities. Only family trust will own the share. And this man will be working, that's all. Money will go to family trust. From there he will say who has to get the money. Whether my, what is that called, first wife children should get or second wife children should get. He can decide. We don't know how long he will continue with the same wife. Isn't it? So that is the reason he wants to decide, not the law to decide. And he doesn't want the property to go to government. So family trusts are there. And because why they are going with the family trust, the tax rate remains here. Tax rate is a neutral. Whether you go with the express line or go to the normal line, rate is remain. So that is exactly I suggest to the government and all. You make it that like LLP are allowing equating to the partnership form. you equate the OPC into the individual slabs. You give the individual slab. Let them progress. Don't kill them the progression. Then you ensure that you will get your own tax. Your what is that share of the tax you will automatically get.
And individually corporate status.
Yeah, that's all. Yeah. The same way, receipt of dividend. Okay, next option also. I am telling you. You treat this as the exception. Receipt of any dividend should not be taxed in the hands of the sole member. Sole member, why? Again, he has already paid corporate tax, which is more than individual slab. Again, you are asking me to pay. Whereas if he is converting into LLP or doing LLP, what will happen? No tax. Section 1010 will come. So same way, why don't you think? So that is some submission to government. Let them also think of it. No, let me allow this taxation. Similarly, as I told clearly, the conversion right now, that section says only you can convert a partnership firm or LLP or a trust into another private limited company which is 2 members, or a public limited company with 7 members, or section 8 company, like that is their term. Whereas they are not allowing existing proprietor concerns into OPC. Existing partnership firms can be converted into either company or into LLP without tax paying. See, they want to convert corporatization itself. We should allow it. Right now, that provision is not there. So we advise the government first, you help them, you understand them, their problem. Let them come, get into your tax network. See, you have a fishing net, no? Let them enter into the net. What is the problem? Then you do what kind of the fishing net I should lay. It may be small holes or big holes. That is, you have. They are entering into your fishing net. You can catch hold. And now you are allowed not getting into that. So they are playing at freedom. So this is the one. Suppose one, I will tell you, one OPC has the lot of, one is the intellectual properties. Another one, patents may be there. Trademarks will be there. If I put everything into OPC and I create that these marks will be rented on someone, and I have decided clearly that my next generation will get this. For example, you are a copywriter, means you got some book. So you look at the copyright law, says clearly that not only his life, another life, then you will get this much. So then succession you can ensure through the OPC, no? That is exactly submission. So they should allow, like partnership firm, they should convert into the companies. So this is my submission. So I have not touched much still because of the audience. So we will certainly help to maybe government now after this, what is that called, changes that they have done recently in the 2021. There is a probability they will further make the changes. Maybe in the next budget, if they attract this particular concept, and what will happen, many people would be interested to get into the network of OPC, and everyone will get the business. They also will get business, and government also will get the taxes. And with this, maybe I am completing quickly. I could have elaborated if more number is there. So whatever is possible, I could deliver it. Thank you very much for the ICAI Bangalore branch for providing me an opportunity to share my knowledge on this OPC. So thank you very much again one more time to Manjuna sir and other office bearers for supporting me to come here all the way. Thank you to all.
Members, one-person company, a very good subject and concept brought in by the Companies Act 2013. Maybe a bit late, but as the saying goes, better late than never. OPC concept for practicing professionals like chartered accountants, company secretaries and cost accountants to continue the legacy by their legal heirs or a fellow professional who can take the unique name forward and the clientele built by OPC, etc. was very well dwelt upon. Hope our lawmakers would bring in this concept after deliberating upon the pros and cons of the same. A round of applause for that. A well deliberated subject by our CS Thirupal sir. A round of applause once again. for his time and effort. Thank you so much, sir. On behalf of members present here and all the managing committee members of Bangalore branch of SISF-ICI, we would like to thank the speaker as a token of gratitude and respect by handing over a memento.
Thank you, sir. Thank you.
Thank you, one and all. With that, I CA Manjunath, Secretary of Bangalore branch. Thank you.